Hello traders, and welcome to the StockGoodies Chart School. Today's lesson is on stochastics, which was developed by George Lane in the late 1950s. It is a momentum indicator, and it shows the location of the close relative to the high-low range over a set number of periods. Let's go ahead and load up the Stochastics Indicator on a standard stock chart. Down here in Indicators, you'll want to scroll down to the bottom, and there are three to choose from. You have full stochastics, slow stochastics, and fast stochastics. Full stochastics will give you smoother lines. But the great thing about this indicator is you can modify the settings. Standard settings are 14,3 for the %K and 3 for the signal line, which is %D. Now, when you load it up, it's got two lines. The red one is the signal line. The black line is actually the stochastics. It ranges from a low of 0 to 100. It also has three horizontal lines. The lower one is the 20 line, the mid line is the 50 line, and the upper line is the 80 line. The first thing you need to understand is what is overbought and what does oversold mean. Okay, the 20 line on the stochastics indicator, anything below that is considered oversold, which means the stock price has been driven down and it's time for a bounce. Anytime stochastics gets above the 80 line, that means that the stock is overbought and is due for a correction back to the downside for a bit to cool off overheated indicators. First of all, let's talk about what happens when a stock is oversold and due for a bounce. Okay, stochastics falls below 20. The black line crosses up through the signal line right here and crosses up through 20. That is a bullish signal, and the stock does go up a little bit. Let's take a look at the next time. The signal line is crossed right here when Sto was below 20, crossed back up through it. Now that was a much nicer uptrend in the stock. Okay, it becomes overbought, falls all the way back down to well below 20, where Sto crosses back up through the red signal line and then back up through the 20 line, and the stock price goes up. It becomes overbought again after a nice run, falls all the way to the 20 line, where Sto crosses back up through the signal line, and another nice little uptrend happens. The last time it happens on this chart is after a pretty serious pullback here from about $6 down to $5.20. The stock became very oversold. It was under 20. The black line crossed up through the signal line, and the stock went up. Now let's take a look at what it means to be overbought. Every time the stock hit the 80 line and dropped back below it, this time it ran flat. Okay, the black line crossed up through the 80 line, back down through the signal line right there, and the stock price fell. Again, it went from extremely oversold, had a very nice rally. Here was the peak right here on this day, on pretty big volume the next day. Stochastics gets above 80, crosses back down through the signal line right here, and back below the 80 line. The stock price goes down. The next time it becomes totally overbought, well above 80, is right here after a very nice run, breaking out above all of this resistance in this area. Nice looking ascending triangle chart pattern, and it does a pretty serious pullback. Okay, this is a Quite often, after a stock breaks above a chart pattern, which is an bullish ascending triangle in this case, it quite often will pull back to the area where it had resistance and bounce, which is exactly what happened here, because it was very oversold and gave a buy signal. Okay, the next time it gets over 80, the black line crosses down through the signal line and through the 80 line, another pullback happens. Same thing here. It gets above 80, signal line crosses, or the black line crosses down through the signal line and drops below 80. And the last time here, you would expect another pullback when right about here, the black line was above 80, crossed down through the signal line. So now you've got an idea that whenever stochastics hits the bottom and bounces, look for a rise in the stock price. When, if you think you want to enter a trade here on the breakout above all resistance on a bullish chart pattern, at that point, if you wanted to buy right in this area, it was already overbought and not really a good idea. Okay. So actually, overbought is time to be selling or locking in profits. If you had bought at the buy signal, you would have been selling at the sell signal for a nice gain from about 420 up to about 560. Okay. Then on this one, if you had bought just as it crossed up through the 20 line in the 520 area, it ran up to the 580 area just on that bounce alone. Now let's take a look at another chart to show how stochastics works. Okay, OWW became extremely oversold right here as the stock moved flat. It dipped below the 20 line. Sto broke above the 20 line and crossed the signal line at the same time right there. Okay, and it ran from about $3 up to $6, and it was overbought for many days. There were only 2 red candles on this entire run before a little pullback. So the reason I'm showing this is to show that just because a stock becomes overbought, if it's in a serious uptrend, it will remain that way for days or weeks at a time. Okay? Technically, the sell signal came right here. And I'll show why this one may not have worked. Okay? The Sto crossed down through the 80 line right here. Okay? But as you can see right here, it bounced at the 50 line, at the center line, just like RSI will. Okay? Even bigger volume came in. And then it broke out above all of this resistance here on very strong volume. Okay, and set a shooting star, by the way, candlestick at the top, where it was, again, very overbought. And as it crossed down through the 80 line and the signal line, it did pull back and then consolidate. So as it ran flat, forming a lazy double bottom chart pattern here, it became very oversold again. At which point, it dropped below the 20 line again. Black line crossed up through the signal line and through the 20 line. And you were in early before the volume that sent it skyrocketing from about 650 up to about 850 in just 1 week. 5 sessions, it looks like. Now here is an example of a bearish divergence. We will use red. Okay. Down here, stochastics set a lower low, while the lows on that particular time frame of the chart set a higher low. Okay, that is a bearish divergence and can signal weakness when the second low on stochastics is lower than a higher low on the stock price. Let's talk about bullish divergences. We've got one of those going on right now. A bullish divergence is when the lows of the stock price are lower, but the highs on stochastic are higher.